Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody's having a fantastic start to 2025. We're here today to talk about the residential real estate market here in Tallahassee. We're going to look at the fourth quarter today and see how things went in the fourth quarter in our local real estate market. We're going to look at some real estate related metrics from the fourth quarter of last year and compare those to the fourth quarter of 2023, just to kind of get an idea of how our real estate market did in the fourth quarter of last year compared to the same time a year before, and give you guys an idea what direction our local real estate market's headed in. We're also going to talk about some tips on what you should be doing if you're looking to buy or sell a house here in our local market. We're going to look at some broader real estate related and economic related news that has an effect on our local real estate market, and we're also going to talk about what I think we can expect to see in our local market in the months to come, even the year to come. So just to kind of start out, talk in general about what we saw in the fourth quarter here. So basically, for about the past 15 months or so, we've seen a pretty consistent trend in the direction of our real estate market, which has been increasing number of properties for sale, decreasing sales, softening price growth. It's taking longer for properties to sell, and we're also seeing properties sell for a little bit less than the asking price, and that's the direction that things have been going in. And in the fourth quarter of last year, we basically saw just a continuation of those exact trends. So basically, we'll start out talking about listings. So as you guys know, we've had a shortage of listings now, probably going on for about 7, maybe 8 years, where the number of properties that we have listed for sale has been far fewer than what we need compared to the number of buyers. But for the past 15 months, that has been changing to a certain extent. We've had more properties coming on the market. So in the fourth quarter, listings were up by 4%. So not a huge number, but they were up 4% compared to a year prior, which is good news. So the number of properties that were listed for sale at any given time in the fourth quarter on average was 1,228 properties, and that's compared to 1,145 properties in the fourth quarter of 2023. So that's a good jump, and obviously much needed because we still have, even though it's been heading in the right direction, we still have a shortage of properties for sale, but at least it's headed in the right direction. So the next metric I want to talk about is sales. So sales continued to slide in the fourth quarter of 2024, and they were down by 13% compared to the year prior. So there's a number of things that have contributed to that, I think, but the main issue boils down to affordability, really. Homes are just really expensive now, and then also mortgage interest rates are high. We had a little dip back in September. They got down to around 6%, the mortgage rates, but now they're back up, and they've been up to around 7% for the last couple months. So high interest rates, high prices, and just overall high cost of living in general is causing fewer people to buy homes right now. So as a result, sales were down 13%. And actually, it was the slowest pace of sales in the fourth quarter since 2013. If you looked at December, just December alone, the month of December last year was the slowest December since 2012, which is pretty crazy if you think about it, because it was really slow back in 2012. I mean, that was when we were still in the feeling the full effect of the Great Recession and all the foreclosure crisis back in 2012. So the fact that sales were that low indicates that it's pretty slow here. Prices, though, did continue to go up in the fourth quarter. So we saw a 3% year-over-year price increase in the fourth quarter of last year. However, I believe that number is a little bit skewed. In Southwood, which is in the southeast quadrant of Leon County, you had a lot of new construction properties that sold. Very high proportion of the sales in southeast Leon County were from those new construction homes, and that helped to drive prices up in the southeast quadrant. So when you break down the price increases, annual price increases in the fourth quarter by each quadrant in Leon County, that tells a more accurate picture of what really went on with prices. So in the northeast quadrant, for instance, which is where 50% of the sales in Leon County are, prices were down by 1%. In the northwest, prices were up by only 2%. In the southwest, prices were up only 2%. But in the southeast, where you had all those new construction homes out in Southwood, prices were up by 10%. So when you average it all together, Leon County, again, prices were up by 3%. But if you take out that outlier in the southeast quadrant, you're probably looking at home prices being about flat, maybe up a little bit less than 1%. But either way, price growth is slowing. So, we were seeing, a year or 2 years ago, we were seeing double-digit annual increases in price growth, and now it's down to 3%. When you look at the month of December alone in the fourth quarter of last year, in December, prices were actually down across the board in Leon County by less than 0.5%, so not much, but it was still down. So, and that's something we haven't seen yet. I would expect in 2025, I think we're probably going to see home prices either be flat, or more likely, I think we're going to see small decreases in home prices compared to the year prior in 2024. I think summer of 2024 was probably our peak for the time being in terms of how much people were getting for their homes. I think by the time we get to the middle of this year, we could see year-over-year prices drop by as much as like 3 to 5%. So that's the way what I would expect to see with home prices going forward. But in the fourth quarter of last year, we did see a small price increase of 3% compared to the year prior. Days on the market. So homes are taking longer to sell now than they did a year ago. So on average, in the fourth quarter, it took 21.7% longer for a home to sell than it did in the fourth quarter of 2023. And to give you the exact number of days, so in the fourth quarter, on average, it took 56 days for a home to sell. And in the fourth quarter of 2023, it took 46 days. So it was basically an increase of 10 days, which that's a pretty good jump in how long it's taken homes to sell. Which again, that's indicative of the fact that the market's softening. So the next metric, the sale price to list price ratio, that was down by 0.25 percentage point, or 0.026 to be exactly. It was down by 0.26% from a year prior. So in the fourth quarter of 2024 in Leon County, the average home sold for 98.31% of the home's asking price, and that's compared to the year prior when it was 98.57%. So not a huge drop, but a small drop, which does indicate that the market's softening a little bit. And again, just to reiterate what the sale price to list price ratio is, that measures in percentage-wise how much a home sells for compared to the asking price. So it's a good gauge to look at to determine how strong the market is. And then the last metric I want to talk about is the what I call the distress sales to total sale ratio, and that measures distress sales as a percentage of overall sales. So distress sales, again, are usually foreclosures or short sales, but they can also be other things like estate sales or bankruptcy sales or tax deed sales. Really any type of sale where the nature of the sale itself lends to the property selling for under market value. So distress sales in Leon County in the fourth quarter were up by 0.8% as a percentage of overall sales. So distress sales made up 2.6% of all sales in Leon County in the fourth quarter of 2024, which is up from the fourth quarter of 2023 when distress sales only made up 1.8% of overall sales. So as a whole, distress sales are still make up a very small percentage of overall sales. I would say having little to no effect on our real estate market. So it's not something we need to dive into very much. But in the southwest quadrant of Leon County, though, I will note that distress sales do make up a pretty high percentage of overall sales, at least compared to the rest of the county. So in the fourth quarter of 2024, distress sales in the southwest quadrant made up 7% of overall sales. So that's a little bit high, and that was up from 2023 when distress sales in the southwest quadrant only made up 4.7%. So we'll keep an eye on that. The southwest quadrant of Leon County is the poorest quadrant. It's the home prices are the lowest. It's where you usually have the people have the lowest incomes in that part of town. So it could be that people just aren't able to keep up with their mortgage payments and are getting foreclosed or having to do short sales, and that might be causing the increase in distress sales. So those are all the metrics. Couple things I want to point out, just kind of some highlights from what we saw. So again, I want to reiterate that in the fourth quarter, it was really the slowest quarter since 2012, actually. So and December was especially slow. And again, that's a pretty big deal. We've seen sales drop to 2013 and 2014 levels over the past couple years, but we have not seen it drop to the 2012 levels. So that's the slowest I've seen it drop. It's a pretty big drop in sales. So that's definitely something that we want to continue to look at. The other thing I want to note is that the main difference between now and 2012, when sales were that slow, was back then inventory levels were much higher. So even though inventory levels have been going up recently over the past year and a half or so here in Leon County, inventory levels are still below where they should be, and they're still about 30% to 40% lower now than they were back in 2012. So even though sales are at the same pace as they were back then, we have much fewer homes for sale than we did back then, which is why prices are still elevated. And that's the thing that's going to continue to keep prices from falling off. Really, is just the lack of supply. So if you're a buyer though in this market right now, what I think you can expect is you're going to have a little bit more negotiating power than you've had probably over the last 5 years. This is probably the best time for home buyers in terms of negotiating power since probably the very beginning of 2020. So that's good news. However, if you are a buyer, if you're looking at homes that are in popular areas, homes priced right, shows well, it's still possible to have multiple offers, and you still may have to pay asking price or very close to it for certain homes. But throughout the county as a whole, you're going to see homes sitting on the market longer. If you're a buyer, you're likely to probably not be competing with other homes or with other buyers on the same home. I mean, it is possible, especially as we get into the busier time of year. Once we get into March, April, and things really start to pick up, you still might have to compete with other buyers, but it's going to be much less common than what we've seen over the last few years. There's just not as many buyers out there, and you're seeing more homes come on the market too. So, I think it's going to be a lot easier to buy a home this year than what we've seen in the last few years. If you are a seller, you need to be really conscientious of what you price your house at. So what I have seen recently is I have seen people list their properties at price levels that we saw in 2024, consistent with what people have been pricing their homes, consistent with what homes were selling for in 2024, and they're just sitting on the market, and then they're having to drop prices to below the sales prices that we saw in 2024. So if you are listing your home, it may be a good idea to price your home slightly lower than what homes similar to yours were selling for a year ago. The rationale behind that is that in the event that prices continue to fall, which they could, you're getting ahead of it, and you're gonna if you price it right, you'll sell it instead of it sitting on the market and seeing the value continue to go down. That's the rationale behind that. It's just kind of being a little bit risk averse and preventing possible future losses in value by having your house sit on the market. So that's what I would do. Also, remember you're competing with fewer buyers. You're competing with more homes for fewer buyers now. So your house has to really stand out. So you really need to make sure your house is in good shape and that it shows well. Make sure you're getting professional photography done for your home. Probably 3D walkthrough tours is a good thing to do, and just make sure that your home is presented really well when it goes on the market so that you can get as many buyers interested as possible. So going forward, like I said before, what I would expect to see is I would expect to see home prices this year continue to soften. You're probably going to see a slight drop in prices, like I said, maybe 3-4% compared to a year ago, especially once we get to like the middle of the year. We're really going to be able to see the prices going down. And then in terms of inventory levels, you're probably going to see inventory levels continue to go up, although probably at a slower pace than what we've seen over the last year or so. Somewhere between 1 to 5%, you'll see an annual increase of 1 to 5% in number of listings is what we'll probably see. Home sales will probably continue to go down too. From a year ago, they'll continue to soften. And then probably by next spring, 2026, that's when we'll start to see home sales go up again. That's my prediction. And that's pretty much it. So I hope you guys found this video helpful. Again, if you have any questions about anything in this video, anything I said, or just any general real estate related questions, feel free to reach out to me. You can leave a comment on the video and I'll reply, or you can shoot me a text, you can send me an email, or you can give me a phone call and be glad to answer any questions that you have. And I hope you guys have a great spring as we entered into the spring, and hope you guys have a great year. And I will be talking to y'all soon in a couple months when we look at the first quarter of 2025 and we go over how things in the market are playing out as we get into the new year. I look forward to going over that information with you guys in a couple months. And I'll talk to you soon. Thanks.